we will begin with the assessment of firms. Okay, before we start with the assessment of firm, this is more related with your PGBB chapter. Okay, provisions under PGBB chapter you should remember, especially depreciation or how to adjust for the amortization of expenses allowed, disallowed, like that. Normally, how do we work out in case of PGBB? We take which one? There are direct methods of working. Take business income less what? Allowed business expenses. You will get PGBB. This is a direct method of working. But generally, in the examination, we are given a profit and loss account. We will take what? Net profit as per which account? Profit and loss account. We will add what? Disallowed expenses which are debited in P&L account. Can you give me some examples of disallowed expenses which are debited in P&L account? Penalties paid, donations given, cash expenses more than 10,000, payment to relatives more than the fair market value. If you find any disallowed expenses, you will what? Add back. In that, most important thing is proprietor's salary. You will add back which one? Proprietor's salary and which one? Interest on capital paid to the proprietor. Is it allowed or disallowed? Disallowed as expense. So we will add disallowed expenses. These are two examples which I take it specifically because this is connected to assessment of firms. Apart from that, other disallowed expenses are there. Can you claim bribe as expense? Suppose bribe is paid. Bribe pay pannirkom. We charged it in P&L account. Can you claim it as expense? It will be disallowed. Purchases made for cash 50,000 rupees. Can you allow it as an expense? It will be what? Disallowed. Depreciation will be disallowed, but we will claim as per what? Section 32 on the Mari. So we will add back disallowed expenses which are debited in which account? P&L account. Then we will eliminate incomes belonging to other heads and exempted incomes. Example. Incomes belonging to other heads and exempted income. Example, dividend received, interest received. Those things goes to which one? Income from other sources. House property rent received. That will go to what? House property income. Okay, for example, the partnership firm has purchased a lottery or a person has purchased a lottery. They got a lottery winnings. Winnings are taxable in which head? Income from other sources. We will eliminate. Okay, agricultural income exempted. We will eliminate it like that. Income either belonging to other heads or what? Exempted incomes we will eliminate. Then we will eliminate or we will deduct allowable expenses. For example, depreciation allowable we will claim. Scientific expenditure deduction we will claim. So we will get which one? PGBB. This is what normally we will do. We will take net profit as per P&L account. Add back which one? Disallowed expenses. Add back disallowed expenses. Then eliminate what? Incomes which are either exempted or belonging to other heads. Then we will get what? Taxable PGBB. This is what we used to do in case of which one? Profits and gains from business or profession. Now coming to assessment of firms. What is a firm? What is a firm? Partnership firm. What is the firm? A partnership firm. When will you call something as a partnership firm? That should be a partnership deed which is registered. Okay, sir. We have partners agreement but is not registered. Agreement which is not registered. Is it enforceable by law? No. For example, A, B, C, 3 partners are there. They have not registered the agreement. Unregistered firm is there. Will you call it as partnership firm? Income tax law calls it as association of persons. Calls it as which one? Association of persons. Only when a partnership is registered with a partnership deed, that is called as what? Partnership form for assessment into, for income tax purpose. If you have not registered the form, that will be called as which one? Association of persons. So for assessing the partnership form, this is the most and first important condition. The form must be what? Registered. Okay. Then, while filing the first income tax return, while filing which one? First income tax return, copy of deed should be attached. When you file your first income tax return, what the partnership firm should do? You should attach what? The registered deed to prove that you are a partnership firm. Suppose if there is a change in the partnership deed, when will you change the partnership deed? In financial accounting, we have learned when there is an admission of partner, partnership deed will change. Retirement of a partner or death of a partner, partnership deed will what? Change. So when there is a change in partnership deed, it should also be submitted. Okay. So how to prove that you are a partnership firm? To income tax department, submit the partnership deed along with filing which one? First income tax return. So second year, third year, fourth year, should I have to file the partnership deed also? No. But if there is a change in partnership deed, that should also be what? Submitted. Only then it will be taken as a partnership form. If I don't submit this deed or if I don't register the agreement, then I will be called as which one? Association of person. An unregistered entity will be treated as which one? Association of persons. Association of persons, where provisions of partnership act, this assessment of firms will not be applicable. So please note all these things before we continue. Okay. Before we learning assessment of firms, we just recollected how to work out for PGBB. Take up this. How to calculate which income? Business income. This is in general. Then let us move on to assessment of firms. This is not a specific thing to assessment of firms. This is a general one. This is a first method, direct method. This is a reverse method of working and finding out. Take up this, please. This is a direct method. The second one is a reverse working method. That is what we did while learning which one? PGBB chapter. Then we are going to see how to calculate what? Income of the firm. Please remember, the first part is not about which one? Assessment of firms. The first part is just to recollect which one? The first part is just to recollect PGBB chapter. Nothing to do with assessment of firms. Shall we proceed? There are two things which I marked it specifically. For an individual, what is not allowed? Proprietor salary is not allowed. Then which one is not allowed? Interest on capital is not allowed. Okay. Apart from other disallowed items. For example, if you make payment without TDS, how much will be disallowed? For resident payments within India, how much? 30%. If it is payment abroad, 100%. Same thing is applicable for partnership firm also. Okay. What about expenditure on promotion of family planning amongst employees? It is allowed only for Indian companies. So for firms and individuals, what you will do? Allowed or disallowed? Disallowed. You will add back. Let it be revenue expenditure or capital expenditure. It will be what? Disallowed. For partnership firm also it is disallowed. Okay. Preliminary expenses. How many installments you can claim? 5 equal installments you can claim. Same provisions are applicable for partnership firms also. Everything is same. But there is a difference between an assessment of individual and assessment of firm only with respect to two matters. What are the two matters? Proprietor salary and which one? Interest on capital. Start. Specific provisions. Specific provisions applicable for firms. Please remember, when will you call it as a firm? There should be a partnership deed. The deed should be filed along with what? The first income tax return. When there is a partnership deed change, it should also be what? Submitted. Okay, only when those conditions are satisfied, then these provisions are applicable. Number one, interest on capital. Allowed up to 12%. Allowed up to what? 12% if specified in the deed. Can a sole proprietor claim interest on capital as an expense? Can a sole proprietor, individual, claim interest on capital as an expense? No, what you will do? It will be fully disallowed. But in case of partnership firm, it will be allowed up to how much percentage? 12%, provided if it is specified in what? For example, in the partnership deed, nothing is specified. What you will do? Partnership deed is silent with respect to payment of interest on capital. Will it be allowed or disallowed? Disallowed. Partnership deed allows only 6% interest. Then you can claim only what? 6% interest. Partnership deed allows 18% interest on capital. Now income tax law says maximum how much is allowed? 12%. So interest on capital is allowed up to what? That's why the word up to is used. Up to how much percentage? 12% if it is specified in the partnership deed. Number two, remuneration to working partners. This is also if specified. If it is specified in the partnership deed. Remuneration to whom? Working partners if it is specified in the partnership deed. How much is allowed? First, rupees 1,50,000 of book profit or loss. First, how much? 1,50,000 of book profit, or in case of which one? Loss. Then you can, sorry, I made a mistake. First rupees 3 lakhs of book profit. First rupees 3 lakhs of book profit or what? Loss. You can pay rupees 1,50,000 or 90%, whichever is higher. First 1,50,000 of book profit, or in case of a loss, you can pay a remuneration of how much? 1,50,000 or 90% of book profit, whichever is higher you can pay. On the balance book profit, you can pay what? 60%. On the balance book profit, we can pay how much? 60%. No, there is a word, what is used? Book profit. What do you mean by book profit? Book profit is nothing but PGBB as computed. This is what we do now. Net profit as per P&L account, add back disallowed expenses like salary, interest on capital, then all these things we disallow, then we work out which one? PGBB, this one. So book profit means PGBB as computed, before allowing remuneration. Book profit is nothing but your business income before allowing what? Partners remuneration. These are the only two differences between normal PGBB chapter and what? Assessment of firms. So interest on capital is allowed up to how much percentage? 12%, but it should be specified in the partnership deed. Remuneration to working partners is allowed. How much is allowed? On the first 3 lakhs of book profit, how much can be claimed? 1,50,000 or what? 90% of book profit, whichever is high. On the balance book profit, how much you can claim? 60% of book profit can be paid as a remuneration. Maybe you can have the title also here. Book profit and remuneration. I'll explain through an illustration so that you will understand better. What do you mean by book profit? PGBB as computed before allowing which one? Partners remuneration. Before allowing partners remuneration, we call it as book profit. Please remember, and the salary can be paid only to whom? All partners or working partner? Salary can be paid only to whom? The working partner. Pay attention. Let's assume, pay attention. Your firm is earning a book profit of 2 lakhs. You worked out book profit came to how much? 2 lakhs. What is the remuneration payable? 1,50,000 or 90% of book profit. 2 lakhs into 90% will give us 1,80,000, whichever is high. How much you will pay? 1,80,000. Okay, let us assume your firm is running in a loss. Negative 30,000. PGBB we worked out, business loss 30,000 came. Now what you can do? The provision says 1,50,000 or what? 90% of book profit, whichever is high. Book profit is not there, it is a loss. So what you can pay? You can pay this 1,50,000. So a minimum remuneration of how much the partners will get? 1,50,000. Otherwise, I'll give you one more example. Book profit is, let us assume, 1 lakh. Book profit is, let us assume, 1 lakh. So 1 lakh into 90%, 90,000 will come, or 1,50,000, whichever is high. So this 1,50,000 is payable in case of loss making firms and firms which are making what? Lesser profits. Okay. Suppose, pay attention. If book profit is 5 lakhs, what will happen? First 3 lakhs, 3 lakh into 90%, how much it will be? 2,70,000. Of course, 1,50,000 or 2,70,000, whichever is higher, will be what? 2,70,000. In a balance will work out of 5 lakhs. First 3 lakhs, 90%. Balance 2 lakhs, 60% of book profit you can pay. Suppose 2 lakhs into 60%. Okay, we'll do some more example. I'm just telling you some moral examples. We'll just take up some practical example and work out. Wait. Suppose if book profit is 1 crore, what you can do? First 3 lakhs into how much percentage? 90%. Balance 97 lakhs into how much you can pay? 60%. This is the maximum remuneration that can be paid to whom? Working partner. These are the only differences between PGBB and which one? Assessment of firms. In case of normal individual, what is not allowed? Interest on capital is not allowed. But in case of firm, what is allowed? Interest on capital is allowed up to how much percentage? 12% if it is specified in the deed. That is number 1. Number 2, remuneration to working partner is allowed. First 3 lakhs of book profit, or in case of loss, how much you can pay? 90% or 1,50,000, whichever is higher. So loss making firm also can pay what? Minimum that 1,50,000 they can pay. Balance of book profit, how much you can pay? 60%. Tax is very simple. Tax is very, very simple. 30%. Tax is how much? 30% of income, taxable income. Very simple. You work out all the, how many heads of income will be there for partnership firm? Salary income not possible. Which head is possible? House property income possible. Then PGBB possible. Partnership also can have what? Capital gain income from other sources. Add up, you will get what? Gross total income. Then you can go for set off, carry forward and all. You can claim deduction. For partnership firm also, for employment of new workmen, etc., the deduction can be given. Then you can get what? Taxable income. What is the tax payable? 30% of total income. 30% of which income? Total income. Sir, what about special rate tax item? For example, LTCG, eவ்வளவு percentage? 20%. STCG, on which STT paid? 15%. Then LTCG, on which STT paid? Shares. Up to 1 lakh non-taxable. Balance will be taxable at what? 10%. Adala same, the lottery winnings or casual incomes. Eவ்வளவு percentage? 30%. All those things remains what? The same. Surcharge applicable is also the same kind of a thing. So no, slab is applicable and up to 2,50,000 exempted. 2,50,000 to 5 lakh. They are applicable only for which one? It is applicable only for individual. If a partnership firm earns 100 rupees, how much of tax you have to pay? 100 into 30%, 30. Sir, can I claim rebate under section 87A? That is applicable only for what? Individual. For a partnership firm, whatever may be the income that you are earning, how much will be taxable? 30%. Special rate items remains the same. And which one is remaining the same? Surcharge also remains the same. HEC also how much percentage? 4%. HEC also 4%. So the tax is going to be different. So between assessment of individuals and firm, these are the distinguishing points. Interest on capital allowed. Remuneration partners allowed to partners is allowed up to the limit. Tax, how much it will be? 30% of total income. No need to copy all these things. It is already given in your material. Read this. Specific provisions applicable for partnership firms. If the deed provides, interest on capital is payable to partner, what is the maximum interest? 12% of capital. It can be allowed up to 12% of capital then. If deed provides, then what? Remuneration is payable only to working partners. Whenever the deed is amended or freshly drafted, then remuneration eligibility is only from what? Date of amendment that is done. Maximum remuneration is payable determined based on which one? Book profit. So first 3 lakhs of book profit, or in case of loss, how much is payable? 1,50,000 or 90% of book profit, whichever is more. Okay. On the balance of book profit, how much? 60%. The allowable remuneration in interest received by the partner is taxable under which chapter? We learnt while learning salary income itself. Salary paid to the partner, is it salary income? There is no employer-employee relationship. It will be taxable under what? PGBB. Same way, interest earned from the firm as a partner. Interest earned from the firm as a partner also will be taxable under what? PGBB chapter in the partner's hand. In the partner's hand. then share of profit is not taxable. Share of profit is not taxable because it is already taxed. Rate of tax is how much? 30%. Special rate tax items like long-term capital gain, meaning etc. remains what? Same. What is the meaning of book profit? Net profit, that is PGBB. Okay, before computing or before allowing remuneration. Okay, net profit as computed from section 28 to 43. Okay, before allowing which one? Remuneration, we call it as which one? Book profit. So what is the difference between assessment of individuals and firms? Interest is allowed, remuneration is allowed up to a limit, tax will be how much? 30% of total income. Special rate tax items etc. remains the same. HCC remains what? The same. Now read through the examples. Example number 1. What is example number 1? What is the book profit? 11 lakhs. As per partnership deed, 3 partners. 3 partners, each eligible for how much? 20,000 per month. Okay, let me to solve for example 1. Other examples you can do. Pay attention. What is the actual remuneration paid? Three partners into 20,000 into 12. How much? Three partners into 12. How much? $7,20,000 is the actual remuneration paid. Pay attention. Allowable remuneration. On the first 3 lakhs of book profit, how much you will pay? 90% of 3 lakhs or 1,50,000, whichever is higher, will be what? 90% of 3 lakhs. How much it will be? 2,70,000. Balance. What is the book profit given? 11 lakhs minus 3 lakhs. On the balance of book profit, eவ்வளவு இருக்கு balance? 60% of 8 lakhs. How much it will be? 4,80,000. So what is the total? 2,70,000 plus 4,80,000. This is allowed. This is maximum allowed. Now wait. The examination, they will ask you how much can be claimed as an expense. What is paid? 7,20,000. What is maximum allowable? So how much you can claim as a deduction? 7,20,000 or 7,50,000? 7,20,000 தான் claim பண்ண முடியும். Why? That is what is actually paid and allowed as per what? Partnership deed, which is within the maximum limit, so we can claim 7,20,000. Otherwise, what your firm has paid actually 7,50,000 or 7,20,000? 7,20,000, so you can claim that as an expense, no problem. Suppose if allowable remuneration is only 7 lakhs, now then what you would have done? Then in that case, 7 lakhs only can be claimed. So here, maximum is 7,50,000, actual is only what? 7,20,000. That 7,20,000 can be claimed as a deduction. Take up this solution for example 1. $7,20,000 is deductible as business expense. In example 2, what is actual remuneration paid? For partner A, how much is paid? 75,000 into 12. You can do it along P, no need to wait. For B, 50,000 into 12, 6 lakhs. For C, 1 lakh into 12, how much? So example number 2, actual remuneration paid is ABC, total how much? 27 lakhs. Let us work out allowable remuneration. First 3 lakhs, no issues. 90% of 2 lakh 70. Balance. What is the income given in the problem? What is the income given in the problem? 38 lakhs. So 38 lakhs minus 3 lakhs. Balance. What is the balance? 60% of 35 lakhs. Work out. You need not wait. So what is deductible? 23 lakh. 70,000 is what is deductible. So which means the remaining will be disallowed. 23 lakh 70,000 is what is allowed. Try to work out for the next example. What is actual remuneration paid? 6,500 into 12. How many partners? 2 partners. What is the book profit given? 1,60,000 into 90% or 1,50,000, whichever is high. 1,60,000 into 90% podunga, you will get 1,44,000 only, or 1,50,000, whichever is high. So this can be allowed. Actual remuneration paid is 1,56,000. Allowable remuneration is what? 1,50,000. Remaining will be disallowed. That cannot be claimed. 1,60,000 and 90% putting in a room. 1,44,000 varum, or 1,50,000, whichever is high. So you can claim 1,50,000. Balance illiye. Inga irukradhe, what is the book profit? Book profit evlo irukku paarunga. 1,60,000 தான இருக்கு. So book profit available is only 1,60,000. Balance illi. Loss இருந்தா that 1,50,000 varum. That you can claim it as what? Loss from business. You can carry forward for 8 years. Partnership firm is already a loss of 20,000. Minimum remuneration amount you can pay 1,50,000. Okay, whatever is paid as a salary to the partner will become what? Additional loss. So that will become like a business loss that can be set off with other hits, or it can be carried forward for how many years? 8 years. You understand? Actual remuneration paid is how much? 1,56,000. First 3 lakhs of book profit. Your book profit is only how much? 1,60,000, 90% put 1,44,000 or 1,50,000, whichever is high, you will get 1,50,000. So this is allowable. Example 4, the question is very simple. Can a loss-making firm pay remuneration? Yes. Maximum how much? 1,50,000. Only two parts are different. Interest on capital up to how much is allowed? 12% is allowed. More than 12% is allowed. But in case of partnership firm, partner salary is allowed based on what? Book profit. Based on the book profit. I request you to take up this problem and we'll work out. What is the net profit? What is the net profit? 1 lakh. Start. Net profit 1 lakh after charging the following. Net profit 1 lakh after charging the following. After charging the following. This is not there in your material. Please copy it fast. Net profit rupees 1 lakh after charging the following. Salary to X 3 lakhs and Y 4 lakhs. Salary to X, how much is paid? 3 lakhs and Y 4 lakhs. Interest on capital paid at the rate of how much percentage? 15%, 75,000, 90,000. Depreciation 2 lakhs. Expenditure on scientific research 80,000. Then P&L account was created with dividend income 2 lakhs, rental income 1 lakh. Rental income from house property how much? 1 lakh. Shall we? P&L account was created with which income? Dividend income and which one? Rental income from which one? House property. Now in the first 4 items, can you tell me which is an allowed expense? Salary can be claimed depending upon certain conditions. First we will disallow it, thereafter we will claim it. What about interest? 12% allowed. So how much will be disallowed? 3% will be disallowed. Depreciation and expenditure on scientific research, nothing is specified in the problem, so we assume that it is allowed. We assume that what is allowed? Depreciation, this much is only allowed as per income tax law. So that is an allowed expense. Expense on scientific research, can we claim? Expenses on scientific research, can we claim it as an expense? Yes, it can be claimed. Unless specified, what can be claimed as an expense? Depreciation, expenditure on scientific research. Two type path only. In-house research and contribution to what? Outside agencies, both are allowed. How much is allowed? 100% is allowed. Depreciation and expense on scientific research is allowed. Look at the P&L account. It is credited with which income? Dividend income and which one? Rent from house property. That should go to what? Other hits. That should go to other hits. So before we start solving the problem, we have to work out which one? PGBP, book profit we have to work out. Start. Computation of Computation of business income. Computation of business income. Computation of which income? Business income. Start. Net profit as per P&L account. Net profit as per P&L account, how much? 1 lakh. Add. Salary paid to the partner. We will allow it later. We'll calculate the allowable remuneration later. Okay. Salary paid to the partner. How much is actual salary paid to the partner? X plus Y. 7 lakhs. Salary paid to the partner, 7 lakhs. Pay attention. Interest on capital is allowed up to how much percentage? So more than 12% will be disallowed. Wait. What is interest given in the P&L account? What is given in the P&L account? 75,000 plus 90,000 total level. If 1,65,000 is 15%, what is 3%? Same like our salary, PPF, RPF computation. 1,65,000 is the total interest. If that is 15, what is 3? Why 3? Why 3? Up to how much is allowed? 12% is allowed. More than 12% extra? 3. So 1,65,000 divided by 15 into 3. Disallowed expense only will come. Start. Add. Interest on capital more than 12% disallowed. Right. Interest on capital more than 12% disallowed. Look at the interest paid. 75,000 plus 90,000. If that 1,65,000 is like the 15, then what is 3? Any doubt in that? 1,65,000 if it is like 15, what is 3? What is 3? 33,000. That will be disallowed. More than 12% be disallowed. Then what about that depreciation and scientific research expenses? No notes or adjustment is given, which means they are what? Allowable expenses, no plus or minus. Then less. Which one you will reduce? Incomes belonging to other heads. What are the incomes belonging to other heads? Start. Dividend income. What is the dividend income? 2 lakhs. Dividend income 2 lakhs. Then what is the next one? Rental income. What is the rental income? 1 lakh. Rental income 1 lakh. That will go to what? Other heads of income eliminated. Wait. From now on, wait. Whatever you calculate now, this is called as which one? Not PGBP. This is called as what? Book profit. Work out and tell me. One lakh plus 7 lakh plus 33,000 minus 2 lakhs minus 1 lakh. How much it will give you? 5 lakh 33,000. 5 lakh 33,000. Pay attention, everybody. We have to work out what? Allowable remuneration to partners. Pay attention, everybody. Pay attention. What is allowable remuneration to partners? Okay. As per Income Tax Act, what is allowed? First 3 lakhs, 90%. First 3 lakhs, 90%, how much it will be? 2 lakhs, 70,000. Balance. What do you mean by balance? 5 lakh 33 minus 3 lakhs, how much it will be? 2 lakh 33,000 into how much is allowed? 60% allowed. So how much it will be? 1 lakh 39,800. So this is the allowable remuneration as per Income Tax Act. What is allowable remuneration? 4,09,800 is the allowable remuneration. This already many times we have done. Look at the actual amount paid. What was the actual amount paid? X plus Y. 7 lakhs. So what you can claim? Can you claim 7 lakhs? What is allowable? 4,09,800 only can be claimed. 4,09,800 can be claimed. When you claim it, this is called as business income. This is called as which income? Business income. Take it up. So 5,33,000 left. First 3 lakhs 90%. Balance 60%. We get 4,09,800. Actual remuneration paid is 7 lakhs. We can allow only 4,09,800. So whatever you get is called as what? A business income. Book profit 5,33,000 minus 4,09,800. We get which income? Business income. So while working out, take the net profit, add back the salary paid to the partners, add back interest on capital more than 12%, that is 3% here. Eliminate income belonging to other heads as usual. Dividend income and which one? Rental income. You get book profit, then claim the allowable remuneration. You will get income from business. So what is business income? 1,23,200. 1,23,200. We worked out only which income? We worked out only which income? Business income. Let us compute total income. Start. Total income of the firm. Total income of the partners or the firm? Firm. The firm has a house property rent. What is house property rent? 1 lakh. For house property, you can claim standard deduction. What is the standard deduction allowed? 30%. Section 24, we can claim what? 30%. No municipal tax, no other values are given. So 1 lakh into 30%, 30,000, balance 70,000. Then PGBB, just now we worked out. What is a PGBB? 1,23,200. What is your house property income net? 70,000. PGBB? 1,23,200. Then dividend income will come in income from other sources. What is the dividend income? 2 lakhs. So what is the gross total income? Less deductions. Under section 80C or 80, no deductions. So this will give us taxable income. What is the taxable income? What is the tax payable for this? No special rate tax item involved here. Tax will be how much? On 3,93,200 into how much percentage? 30% HEC. How much percentage? 4%. Take it up. And this is one of the most important MCQ which is tested, which I tell it to you over here. Taxable income, pay attention. If it comes to 2,99,995, what will you do? 2,99,995. If it comes, income will be rounded up to nearest multiple of 10. Nearest multiple of 10, which means how much will be taken? 3 lakhs will be taken. This is section 288A. Very important section is it. 288, which one? According to section 288A, income will be rounded up to what? Nearest to 10. According to section 288B, tax also will be rounded up to nearest multiple of 10. So in this problem, what will be the tax payable? 122,6. Both tax as well as income will be rounded up to what? Nearest multiple of 10. So income rounding off section 288A, tax rounding off comes under what? Section 288B. Sometimes they may ask it in a specific question. Income tax will be rounded up to nearest multiple according to which section? Sometimes like that they ask it. Okay, this is one of the most important sections to be remembered. Not all the sections. Section like 32 na depreciation. Okay, section 16 now what is it? Standard deduction for salary income. Section 24 na standard deduction for which one? House property income. Most important section you should remember. 54 na another. Section 54 capital gain la exemption. 54B agricultural land invested in another property like that. So important sections alone you should remember. Both income as well as tax will be rounded up to what? Nearest 10 rupees. Next 10. 5 or more, it will be taken as what? Next 10. So we work out gross total income minus deductions taxable income. On that tax, how much percentage? 30%. HEC 4% we get. Now come to this question. Question number 1. Following is the P&L account of which partner given? RGS. Now go through this. Salary to staff is given. Business expense are given. Interest on bank loan, is it allowed or not allowed? Salary allowed or not allowed? Salary to staff allowed. Business expenses allowed. Interest on bank loan allowed. Then salary to partners we will add back first. Salary to partners first we will add back. We will see the book profit. Based on that we will claim which one? Allowable remuneration. Even commission to S also. Any form of remuneration paid to the partners, first we will disallow it, then we will see. Interest on capital up to how much is allowed? 12% will be allowed. What will be disallowed? More than 12% will be disallowed. If you find if it is more than 12%, it will be what? Disallowed. Can he claim provision for bad debts? PGBPP chapter we learnt about this. Actual bad debts only can be claimed. Provision for bad debts cannot be claimed. This will be added back as a disallowed item. Depreciation. We will add it back. We will claim what is allowable depreciation. Allowable depreciation. This we will claim. So whatever is the depreciation given in the P&L account, we will add it back. Then we will claim what? Allowable depreciation. Then what about donation to Prime Minister's National Relief Fund? This is covered in what? 80G. So this will be disallowed as an expense here, but deduction however can be given under section what? 80G. So we will take net profit as a starting point and work out. Then what about this interest from government security? We will eliminate. Why? That belongs to what? Income from other sources. Interest from bank also, it will belong to what? Income from other sources, we will eliminate. Then look at depreciation allowable as per income tax rule, we will claim it. This point, go through and tell me whether anything comes to your mind. On 15/2/2022, the firm paid interest liability of 20,000 relating to which year? Previous year. This is not debited in the above said P&L account. Yeah, allowed, disallowed. This is not debited to P&L account. This is not debited to P&L account. Otherwise, this interest on loan, this interest on bank loan, clear. This one and the adjustment given are not related. Nothing is debited to P&L account. Anything comes to your mind? PGBB chapter statutory payment pathon section 43B. Go through please. Please go through the provisions of section 43B. Page number I hope 147. Look at this. Statutory payments. This is applicable to mercantile system of accounting. Okay, what are the statutory payments? Anything payable as tax, duty, cess, etc. Employer contribution to PF, gratuity fund, etc. and all. Bonus, commission are payable. Leave cash, encashment payable to the employees. Any sum payable such as which one? Interest on loan from a bank. All these things, all these statutory payment, then deduction can be claimed only when the amount is what? Paid before the due date of filing of return. Ninga due date of filing of return kulla pay pannadha enna panna mudiyum? Deductions claim panna mudiyum. Suppose if you have not paid the money, if you paid it later on, deduction can be claimed in the year in which what? Actual payment is made. Now come back to the problem. Which page number? Assessment of firms. Which page number? 380. Now come back to this question. Now read this. On 15 to 2022, the firm paid an interest liability of 20,000 relating to which year? Last year interest, current year pay pannirukka. Okay, it is a statutory payment. Whether deduction would have been allowed in last year? Last year, deduction claim pannirupana? No. Why? This was not paid before the due date of filing of return. But it is paid in the current year. It is paid in the current year. So what you can do? You can allow the deduction. You can allow the deduction. Statutory payment, deduction can be claimed on what basis? Payment basis. So we have to work out here. Then, both opening stock and closing stock is undervalued by how much percentage? This has nothing to do with income tax. This is a general rectification of error. You have to think logically. If opening stock is undervalued, what will happen? If closing stock is undervalued, what will happen? And rectify the error. It is not income tax, it is which one? Financial accounting, rectify the error. Then, partnership deed provides what is a ratio? 3:2:1. Salary given, interest on capital. Look at interest on capital, how much is there? 15%, 20% and what? 20% is given to us. How much is allowed? 12% allowed. So more than 12%, whatever you find, it will be what? Disallowed. More than 12%, whatever you find, it will be disallowed. Okay, commission payable to partner is given to us. They ask you to find out what? Total income of the firm. So first let us start with which one? Net profit as per which account? P&L account. Let us start. How much? What is the net profit as per P&L account? 75,000. Add back. Please do it along, don't wait. Add back salary and commission paid to partners. What is the salary and commission paid to partners? This 1,14,000 and 12,000. Salary and commission paid to the partners. Add back, don't wait, do it fast. Net profit as per P&L account 75,000. Add back both salary and commission paid to the partner. This is coming under remuneration to partners. 1,14,000 and how much? 12,000. Add back salary and commission paid to the partner. We will claim it later on. Based on book profit, we can claim it later on. Next, interest on capital, how much is allowed? 12% allowed, more than 12%, right? Interest on capital more than 12%. Look at for R. R க்கு எவ்வளவு percent pay பண்ணிருக்காங்க? Look at the adjustment. எவ்வளவு percent pay பண்ணிருக்காங்க? 15% excess எவ்வளவு இருக்கு? 3%. So 9,000 into 3 by 15. 9,000 into 3 by 15. 9,000 into 3 by 15. Why 3 by 15? More than 12 எவ்வளவு இருக்கு? 3. For G, 6,000 into 8 by 20. Why 8 by 20? 20 when the more than 12, how much is there? 8. For S also, 6,000 into 8 by 20. Okay, this 9,000, 6,000, 6,000. More than 12% it is disallowed. More than 12% it is disallowed. Next, provision for bad debt is an expressly disallowed item. What is the provision for bad debts? What is the provision for bad debts? 12,000. Only actual bad debts can 2,000 or 12,000? 2,000. Okay. Only actual bad debts can be claimed. Provision cannot be claimed. Add it back. Depreciation as per P&L account, you add it back. Depreciation as per P&L account, you add it back. We will claim allowable depreciation separately. Then donation to Prime Minister's National Relief Fund, whatever it is, disallowed because it will be allowed under what? Section 80G. How much is the donation? 3,000. Claim allowable depreciation. What is allowable depreciation? Adjustment la parunga kuduthirukkom. What is allowable remuneration? 31,000. Allowable remuneration is how much? 31,000. Less interest allowed on payment basis. Interest allowable for what? On which basis? Payment basis. That is given in the second adjustment or first adjustment. This interest. Interest liability, how much? How much is paid? 20,000. Pertaining to which year? Last year it is paid. In the current year, that is allowed on what basis? Payment basis. Statutory payment, section 43B. I hope some rectification of error also should be done. Up to this, are you clear? Net profit as per P&L account, how much? 75,000. We add back salary and commission because we will allow it later. Interest on capital more than 12%. More than 12% for R 3 by 15, G 8 by 20, S 8 by 20. Provision for bad debts, only actual loss can be claimed, provision cannot be claimed. This is not assessment of firm, PGBB chapter. Then depreciation as per P&L account, how much? 26,000. Donation will be claimed under section 80. Then less allowable depreciation. Interest paid in the current year is a statutory payment. Where are the? Yes, come to the credit side of P&L account. Come to the credit side of P&L account. There is what is given? Interest on government securities and which one? Interest from bank. This belongs to what? Other heads. You have to eliminate. Less income from other sources. Interest. Income from other sources. Interest credited to P&L account. Eliminate the total interest. What is the total interest? 28,000. Listen to it. Look at the stock adjustment. If cost is 100 rupees, it is undervalued by evlo percentage கொடுத்துருக்கான் பாருங்க. If cost is 100, it is undervalued by what? 10% means value given is 90. Value given is 90. Look at the opening stock value. Pay attention, then you can copy. What is opening stock value? 81,000 into 100 by 90 podu. 81,000 into why 10 by 90. Why 10 by 90? If 90 is 81,000, what is 10? 9,000 will come. Closing stock paranga. 90,000 into 10 by 90. How much it will be? 10,000. I repeat once again, pay attention. If cost is 100 rupees, if cost is how much? 100 rupees, it is undervalued by 10. So what is the value given? 90. If 81,000 is like 90, what is 10? 9,000. Closing stock order value. Okay, 90,000 into 10 by 90, how much? 10,000. Okay, maybe you can leave about, after this working, after this 28,000, leave about 10-15 lines gap and take this as a note. Now we have to work out book profit, remuneration la calculate panno. So leave around 10 lines of gap and take it as a note. Working note for stock. The statement is clear. Adukapura or 5-10 lines gap podunga. Then take up this working note. Any doubt in it? 81,000 into 10 by 90, 9,000. 90,000 into 10 by 90, 10,000. Now pay attention. Because of this, what is impact? Profit left impact irukum. Logical think padunga. This is nothing to do with income tax, just to do with financial accounts. Opening stock undervalue panne nahum. Opening stock is a debit item. Opening stock is a debit item. When you enter a lesser amount in the debit side, what will happen? Profit will be overstated. How to rectify the error? Less. Start. Come back to the statement and start. Less undervaluation of opening stock. Undervaluation of opening stock. A less pandro. Opening stock appears in the debit side. When you enter a lesser amount, what will happen? The profit would have gone up, eliminate it. So what about closing stock? Closing stock appear in credit side. Credit side like in the credit side when you enter a lesser amount, profit will be understated. Because of the error, profit will be reduced. So let us add back. Once again, opening stock is which item? Debit item. In the debit side when you enter a lesser amount, profit is overstated. How to rectify it? Eliminate it. In the credit side when you add it back. Add undervaluation of closing stock. So this will give us book profit. So take net profit as per P&L account, add salary, add interest, add provision for bad debts, depreciation donation, provide for allowable depreciation, then provide for statutory payment, that is interest, then eliminate income that is belonging to other heads. Stock adjustment. We eliminated undervaluation of opening stock because it has increased the profit. Closing stock add pandro, it has reduced the profit, so we added back. So what is the book profit you get? 1,60,600. 1,60,600. Then now we have to work out which one? Allowable remuneration. Listen to it. What is allowable remuneration? Income Tax Act. First, how much of book profit? First, how much of book profit? 3 lakhs of book profit allowed? 90%. So, book profit is only 1,60,600. 1,60,600 into 90%. That will give us 1,44,200 or 1,50,000, whichever is high. So, 1,50,000. Once again, I repeat. First 3 lakhs of book profit. First, how much of book profit? 3 lakhs of book profit. What is allowed? Respond. Sir, 3 lakhs of book profit. 90% of book profit or 1,50,000, whichever is higher. So what is the book profit? 1,60,600 and 90%. How much you get? 144,240 or 1,50,000, whichever is higher. This is as per Income Tax Act. Look at the actual remuneration paid. What is the actual remuneration paid? Already we add pannirukkome. 1,26,000. Actual remuneration paid is 1,26,000. So we can claim how much now? Yes, 1,26,000 we can claim. Take up this. Maximum allowed is 1,50,000, but we paid actual 1,26,000. That can be claimed as an expense. When you reduce this, you will get PGBP. That is what is debited in the P&L account. The monthly salary is 4,000 into 12, 48,000. 3,000 into 12, 36,000. 2,500. Commission would have been calculated based on what? Purchases. The 14%, 0.25%. 48 lakhs into 0.25%, 12,000 more. So what is PGBB? 34,600. 34,600 is your PGBB. As per partnership, there is Income Tax Act. Allowable is 1,50,000, but actual remuneration is only what? 1,26,000. So we claim 1,26,000. PGBB is 34,600. The question is not over. They ask you to work out which one? They ask you to work out which one? Taxable income ketirka. Let me also complete that. 34,600. Then apart from that, any other income for the firm? Look at the P&L account credit side. This interest. Interest is taxable under what? Income from other sources. So PGBB 34,600. Income from other sources 28,000. ATG and the donation claim panikalam. What is the donation? Without limit or with limit? Donation on the without limit or with limit? Without limit. 3,000. 100% deduction without limit. 3,000. So you will get 59,600 is the taxable income. On that you have to pay 30% tax. Tax will be 59,600 into 30% plus HEC how much percentage? 4%. We worked out book profit. Then we worked out allowable remuneration 1,50,000, but actual is only 1,26,000. So we allowed that 1,26,000. PGBB was 34,600. That 34,600 plus IFOS interest minus donation will give us taxable income. Total income you have to pay what? 30%. HEC how much percentage? 4%. No basic exemption for partnership firms. Read question number 2, Parul. S, M, J are equal partners in a firm of which one? Interior decorators. Yes. The P&L account is given for the year ending 31st March 2022. What is given to us, Parul? Gross receipts, how much is given? Okay. Gross receipts 29 lakhs. Consultancy receipts are given. Look at what about interest on government securities? Under which head it will come? So this will be eliminated. This interest on government security will be eliminated. Then dividend will be eliminated. Long-term capital gain eliminated. Winnings also will be eliminated. All these things will go to what? Other heads. Then debit side la trade expense allowed, salary is allowed, printing and stationery allowed. Donation we will add it back. Depreciation we will see. Rent is also allowed. Interest we have to check and see. Look at the adjustment. Trade expense include how much? 62,000. Computer purchased in which year? Which month? October month. And 77,200 paid as what? Income tax. These are all capital expenditures. These are all capital expenditure which you have to disallow. Then furniture had opening WDV 40,000. Furniture purchased in May 2000. How much? 12,000 which was capitalized May 2021 actually. To be capitalized. Of the donation, 1 lakh is given for approved scientific research institution. Donation 40,000 is given to approved charitable institution. Balance is given for what? Poor students. Interest on capital has been taken at how much percentage? 20%. Compute total income of which one they ask for? Before charging remuneration, as well as they ask you to find out what is the maximum remuneration payable under section 40B ketirka. Before we start to solve the problem, we have to work out allowable depreciation. We have to work out what? Allowable depreciation. Computer get a depreciation rate 40%. Furniture rate. Furniture 10%. Section 32 block of assets method. We have to work out what? Depreciation first. Start. Computation of allowable depreciation. Maintain particulars and 2 columns. Computation of which one? Allowable depreciation. What are the assets? Furniture and which one? Computer. Start. Particulars, furniture, computer. Do it along with me. Opening WDV. Furniture எவ்வளவு கொடுத்திருக்கான் பாருங்க adjustmentல. Opening WDV furniture how much is given? 40,000. Additions more than 180 days, less than 180 days, like that we have to classify. Furniture was purchased in May month, so 12,000. That is for less than 180 days. Less than 180 days. Computer is purchased. Computer purchased for how much? 62,000. So October now we can assume that less than 180 days. So allowable depreciation on furniture, there is computer 62,000 into எவ்வளவு percent allowed? 40%, but less than 180 days என்ன பண்ணுவீங்க? 20%. Less than 180 days, so 20%. On the balance of assets, furniture 52,000 into 10%. So this will give us allowable depreciation. Furniture, opening balance plus purchased in May, used for more than 180 days, we can claim full depreciation. 52,000 into எவ்வளவு percent? 10%. Opening balance plus addition. PGBB ல பார்த்திருக்கோம் இல்லையா? If the asset is put into use for more than 180 days, we can claim what? Full depreciation. Computer, what is normal depreciation allowed? 40%. But in here 20% போடுறோம். Purchased in October, that is used for less than 180 days. We can claim only what? Half the eligible depreciation. So 12,400. 5,200 plus 12,400. This is the allowable depreciation. So we will add back depreciation given in the P&L account and we will claim only which one? Allowable depreciation. Over. Start. Now we can compute which one? PGBB. Start. Computation of business income. Allowable depreciation is 17,600. Start. Business income computation. Start with net profit as per P&L account. What is the net profit as per P&L account given in the problem? What is the net profit as per P&L account given in the problem? 9,80,000. 9,80,000. Add back disallowed expenses. Do it along with me. Don't wait. Start. Net profit as per P&L account 9,80,000. Then adjustment number 1 la பாருங்களேன் 72,000 paid as income tax கொடுத்திருக்கான். Income tax is expressly disallowed by Income Tax Act. Income tax paid. Income tax paid 77,200. Adjustment number 1 also says computer purchased debited in trade expenses. That's a capital expenditure. Add it back. Income tax paid 77,200. Computer purchased 62,000. Interest on capital more than 12% disallowed. எவ்வளவு percentage pay பண்ணிருக்காங்க? 20%. How much will be disallowed? 8% will be disallowed. Interest on capital 8 by 20 into 2 lakhs. Interest on capital 8 by 20 into 2 lakhs. Why 8 by 20? Interest has been paid at the rate of how much percentage? 20%. Interest has been paid at the rate of 20%. That is 2 lakhs. Interest on capital is 2 lakhs. If that is 20%, what is excess? 8%. Then add depreciation which is there in the P&L account. What is there in the P&L account? 25,000 you add it back. All donations as of now you add it back. Then we will claim the allowable expenses later. We will see allowable expenses later. Let us add back as of now the full donation. Let us claim the allowable expenses later. We worked out the first working note earlier. What is allowable depreciation? Allowable depreciation 17,600. Once again, so far what we have done, I will repeat. We add back income tax paid. Why? PGBB chapter it is expressly disallowed. Computer purchased included in trade expense. It's a capital expenditure, it is disallowed. Interest on capital more than 12% 8%. So 8 by 20 into 2 lakhs disallowed. Depreciation as per P&L account disallowed. Donations disallowed. Donations, first let us add back full donation. Allowable claim panikalam. Then allowable depreciation how much? 17,600. Less which one? Donation for scientific research can be claimed earlier. Look at the donation. How much is given for scientific research? 1 lakh. This 1 lakh can be claimed. What about this approved charitable institution? That will come in 80G. That will come in what? 80G. So less donation for scientific research. What is the donation for scientific research? What is the amount? 1 lakh, for which full deduction can be claimed. 1 lakh is deductible. We added back donation and we claimed what? Allowable expenses. Then come to the credit side of P&L account. Come to the credit side of P&L account. Eliminate pannu. Interest, dividend, long-term capital gains and what? Winning from lotteries. All those belongs to what? Income from other sources. Eliminate income from other sources. In the P&L account we take only gross income. In the P&L account we take only gross income. Eliminate them. Minus interest on government securities also. What is interest on government securities? 20. Eliminate that also. Dividend, long-term capital gain credited, winnings credited, interest credited. Eliminate everything and tell me this will give me which profit? Book profit. So we reduce allowable depreciation. Then donation for scientific research is allowed. Dividend is taxable in income from other sources. Long-term capital gains credited to P&L account. That is going to capital gain chapter. Winnings goes to income from other sources. Interest on government securities taxable under income from other sources. Eliminate it, you will get book profit. What is a book profit? 10 lakh? Listen, they don't ask, they have not given what is actual remuneration paid. Pay attention. They have not given in the problem what is actual remuneration paid. We are asked to work out only which remuneration. Start. Allowable remuneration. First 3 lakhs into how much percentage? 90%, 2,70,000. First 3 lakhs into 90%, how much? 2,70,000. Balance over. Into how much percentage? 60%. How much it will be? 35,000? 960. So add both. This will give us allowable remuneration. Okay, the actual remuneration is not given. So whatever is allowable is deductible. What is deductible? 2,70,000, 4,35,916 in our This becomes our business income. First 3 lakhs of book profit, 90%, that is 2,70,000. Balance, that is 10 lakh 26,600 minus 3 lakh, 7 lakh 26,600 into how much percentage? 60%, 4 lakh 35,960. You get 7 lakh 5,960. You get PGBB. What is PGBB? Three lakh 20,640. 3,20,640. And is it possible to work out taxable income? PGBB 3,20,640. Where in it? Capital gain, long term capital gains. LTCG, how much is there? Credit side P&L account they have given. Yes, how much is there? 2,02,000. Then look at the question, is they ask you taxable income or which income they ask for? Total income of the firm, total income of the firm. Okay. LTCG how much? 2,02,000. Then income from other sources. Income from other sources enna varum? Dividend income how much? 5,000. Interest on government securities. Then winnings. How much? 20. Yeah. This will give us gross total income. 3,20,640 plus 2,02,000 plus dividend 5,000, interest 23,000, winnings 20,000 will give us what? Gross total income less ATG. We can claim the deduction. In ATG we can claim what? Or the deduction. ATG la enna deductions varum? Adjustment la kuduthirukam. Donation include 1 lakh paid for what? Approved charitable institution. 40,000 is given. Okay. 1 lakh is given for scientific research, already claim maniyachu. This 40,000 given for what? Approved charitable institution, that comes in with limit donation. That comes in what? With limit donation. Okay, what is the limit? Limit 10% of adjusted gross total income. 10% of adjusted gross total income. So 10% of adjusted gross total income. What is the gross total income first? Add panna. 5 lakh. So 5,70,640 minus what and all you have to eliminate? LTCG eliminate pannu. LTCG evlo irukku? 2,02,000. You have to eliminate all special rate items, winnings. We eliminate 10% paranga, that is the limit. 5,70,640 minus all special rate tax items and other deduction under section 80 is not available. So 5,70,640 minus 2,02,000 minus 20,000 podina, that into 10% apply panunga, you will get the limit. 5,70,640, 2,02,000, 20,000 into எவ்வளவு percentage 10%. எவ்வளவு வருது 34,860. This is the limit for donation. 860?
64.
34,864 is the limit. But what is the actual donation? Actual donation is how much? 40,000. So which one you will take? Into 50%. Why into 50%? Why this into 50%? Which comes in what? With the limit 50%. With the limit 50%. How much you will get? 430. The less பண்ணுங்க, you will get taxable income. $5,70,640 minus 17,432 will give us taxable income. What is the taxable income? $5,53,000. Once again, I repeat. Limit for donation is 10% of adjusted gross total income. 10% of adjusted gross total income. What is adjusted gross total income? Gross total income minus long-term capital gain, casual income, and other special rate taxed items. So we get, this is the limit. 34,864 is the limit. Actual donations are 40,000. So 34,864 into எவ்வளவு percent? 50% can be claimed. So taxable income is 553,208. இதுக்கு ஒரு step extra போயிட்டு, if they ask you to work out tax liability, what will you do? Direct 30% போடுவீங்களா? No. Special rate item இருக்கு பாருங்க. Long term capital gain 2,02,000 எவ்வளவு percent? 20%. How much it will be? 40,400. Winnings 20,000 into 30%. எவ்வளவு வரும்? 6,000. Balance. Balance means balance எவ்வளவு இருக்கும்? 5,53,208. Eliminate 2,02,000 and 20,000. How much you get? This into how much percentage? 30%. Add up. Thereafter you have to add what? HEC எவ்வளவு percent? 4% you have to add up at the end. Special rate items are common for individual and what? Firms also. Long-term capital gain taxed at 20%. Winnings are taxed at 30%. Balance income. Balance income means take the balance. இதுல the 2,02,000. Then balance. Actually round up பண்ணி எடுக்கலாம். 3,31,210. Now income will be rounded up to what? Nearest 10. So income will be what? 5,53,210. This is a complete problem on assessment of firms. Please remember, assessment of firms are covered in your final level also. Whatever you learn as income tax at intermediate level, it is covered at your final level also, but at an advanced level. All the 5 heads of income. All the 5 heads of income. And which one? Deductions, set of carry forward of losses, clubbing of income, assessment of individuals, tax rates. Which one? Even this assessment of firm is covered at the final level. And please remember, year 22 and 23, there is no much of amendment made in tax. No much of amendment made in what? Tax. So the same provision will be there at your final level also. You have to remember. All the provision you have to remember. Sir, final extra you are going to learn about assessment of companies. You are going to learn about assessment of trust, assessment of AOP. More about search, Caesars, international taxation you will learn. So whatever you learn at the intermediate level, plus you will add knowledge at the final level over there. So work out the tax and close. Over. This computation you can do it later also, no issues. We will proceed to the next question. Just number calculation, you can do it separately also. Go through question number 3. Many students do overlook mistake in this problem. What is the net profit given? 7 lakhs. Then what is the salary given? 20,000 into how many working partners? 2 working partners into 12. So what you will do? Net profit you will add back. Wait, this is what you will think. Then depreciation 1,50,000 is given. Interest on capital, how much is given? 15% is given. Amount of eligible interest is 5 lakhs, like that it is given to us. They ask you to calculate what? Book profit and allowable salary. They ask you allowable salary for your relevant financial year. Allowable salary for your relevant financial year. Normally, what is the overlook mistake is just like that we read net profit is given, we add back less, etc. Put it over. The highlighting point is, look at the first line. Net profit 7 lakhs. What is given? Before deduction of the following items, which means point number 1, 2, 3 are not deducted. Point number 1, 2, 3 are not what? Deducted. Now, net profit after charging various items we had seen. This is the problem where we see which one? Before deducting these items are given. Which means if it is allowable, we will deduct it. If it is allowable, we will deduct it. If it is not allowable, we will not deduct. That's all. Start. Computation of book profit. Start. Computation of book profit. Net profit given. What is the net profit given? 7 lakhs. Net profit given is 7 lakhs. Less. Less. If it is allowable, you deduct it. Salary apprama dhaan claim panna mudiyum. Depreciation we can claim. What is the depreciation as per section 32? 1,50,000 less allowable interest. What percentage allowed? 12% of capital. Direct capital. Look at the amount of capital eligible for interest. How much is given? 5 lakhs. So they've given capital simple of 5 lakhs into 12%. This will give us book profit. This is one of the most repeated sum in the examination point of view, or in the exam. You may get the same question for your exam also. But of course, different numbers are kepanga. Less remuneration to partners. What is actual paid? What is actually paid? 20,000 into 2 partners into 12. 4,80,000 is actual paid. Allowable as per Income Tax Act. First 3 lakhs. into 90%. 2,70,000. Balance in error 1,90,000 into 60%. How much? So this is allowable remuneration. 2,70,000 plus 1,14,000 is the allowable remuneration. So which one you can claim? This will give us business income. So up to this answer for book profit, remuneration paid to the partner, actual paid or allowable as per Income Tax Act is 3,84,000. So we get PGBB how much? 1,06,000. This shall be tested for 3 marks, like 1 mark for book profit, 1 mark for allowable remuneration, another 1 mark for what? Calculating PGBB. One of the most repeated question in the past examination. With this, what is over? Assessment of firms is over.